Hi, this is Michelle with Mitchell Consulting again, and today we are going to talk about um, the chart of accounts in QuickBooks Online. So in QuickBooks Online, the basis for how the software works is using the chart of accounts. And what the chart of accounts is in accounting is it's the categories where you charge things to, or it's the categories where income goes, or your bank accounts. And the basics of accounting, you have your assets, your liabilities, and your equity, and those all live on your balance sheet. The thing that most business owners are most familiar with is the profit and loss statement. And on the profit and loss statement, the income and your expenses live. And at the end of that report is where you can see whether or not you have a profit or loss. Now, the only account that lives on the balance sheet from the income statement is the number of your profit or loss. No other number on your profit and loss statement will actually appear on your balance sheet. But what your balance sheet does is it lets someone know how effective your business is. So it looks at your assets, which are those things that you own or money that is coming to you, or things that you owe, whether it's in accounts payable, bills that you have outstanding, or loan payable, which are loans that you pay, or credit cards that you pay. So it's looking at what you own versus what you owe. And the difference between the two is the equity section of your balance sheet. And this paints a picture of how well your business is doing, and you can calculate like efficiencies and things of that nature using the totals on your balance sheet. So today I thought that I would walk you through the chart of accounts, because the chart of accounts is the basis for how QuickBooks or any accounting software actually runs, so that you can get those reports, so that you can get the balance sheet report, or you can get your profit and loss report. Another name for the profit and loss report is also the income statement. Just so you know, those two names are interchangeable. So I'm in QuickBooks Online, and we're going to go over here and click on your accounting. And then that automatically brings up your chart of accounts. And in this QuickBooks Online file, you can see your chart of accounts. It lists out the name of the account, the type of account, and the detail type of the account. In QuickBooks Online, you need to set the type of account and the detail type of account. A lot of times I see business owners create chart of accounts in the chart of accounts, and they're titled like a contractor's name. That's not right. That's not how you should be tracking those types of expenses. But then they don't set the account type or the account detail type. So therefore, when you run a report, it may show up in a different location than what you had intended. So when you look at your chart of accounts, it's separated by your assets are at the top, and then by type. So your bank accounts come first because they're the most liquid in your business. And then your accounts receivable. So if you are sending invoices to clients and they can pay you later, it shows up actually on your accounts receivable account because you're expecting that income to come in at a later date. And then you have some other assets that are current that come up after your accounts receivable accounts. And these accounts are other assets you may have, whether you have inventory or not, if you're a physical business, but most businesses I work with don't have physical inventory. They may have digital products, but not necessarily a physical product. So if you don't have a physical product, don't worry about that section. And then you have prepaids. Prepaids are stuff like deposits made on rent or insurance paid in advance, things of that nature. Those would appear there. Uncategorized assets and undeposited funds are automatic accounts that QuickBooks Online issues when you create a new account. So you will always get these two accounts, and you cannot change those accounts. If you have fixed assets, anything that you use in the business that's an asset of the business that actually helps you generate income, those should appear here. And then you would have your depreciation accounts would also appear here. Now, the next section after assets would be your liabilities. Those are things that you owe. You owe money to someone else, and your liabilities could be like your electric company or like your rent or, a contractor that you're going to pay later would appear in those accounts. And then you would have your credit card accounts, and then like retainers. If you're a business, like a professional services business, and you take a retainer or a deposit of funds before you start working on a project, then those retainers are actually a liability because you haven't performed the service yet. So once you perform the service, then those funds are transferred to income because you've provided the service to the person. And then you can have your lines of credit, any loans would also appear here. Any long-term liabilities, which would be things like a car note, the long-term portion of a car note and the long-term portion of a loan that you took out for the business would also appear here. And then your payroll liabilities if you have employees, but if you don't have employees, you won't have these accounts. And then we come to your equity section, and your equity section of your balance sheet is actually the difference between your assets and your liabilities. Also, your owner's pay. So if you're paying yourself as the owner of the business, that equity account will also appear here. And then retained earnings is the end of the balance sheet. And retained earnings is an accumulation of what the business has done over the years. So basically, it takes your net income or net loss along with the difference between your assets and your liabilities, and it balances out right here into your retained earnings. And then these accounts, they start your income statement or your profit and loss statement. And you can see we can have a number of different categories for income, and you can segment your services by types of things you sell, so that they'll show up on the profit and loss. So you can do reports and things like that to dig deeper into how much does it cost to gain those sales and things like that. So those are here. And then the rest, your cost of goods. So cost of goods is kind of like an expense, but what it actually is how much have you spent to produce one product or service directly? So it's the direct cost of producing those services that you have. For instance, with service-based businesses, you may have a contractor working for you, and all they do is help you provide that service to your customer. Then they could be considered in the cost of goods section, because without that cost, you wouldn't be able to provide that income. So that's what that is. And then the rest of this is just your expenses. And expenses are those things that you spend in your business. So it could be office supplies, it could be travel, it could be marketing, it could be advertising, it could be training. If you own your own building, it could be repairs and maintenance on your building. Also, the expensed portion of your payroll will also show up here. So I just wanted to go over with you today what the chart of accounts is in QuickBooks Online and where does it segment between the two reports, between the balance sheet report and the profit and loss or income statement. So I hope this was helpful for you today and that you got a lot out of it. If you have any questions that you would like to ask, please don't hesitate to contact us at mitchellconsultingservice.com. Thank you and have a great day.